just before we get to hot picks, we are getting a breaking story. The Supreme Court in the U.S. has not ruled on that challenge to the president's tariffs. And apparently we now have to wait until at least next week to learn whether the court is going to strike down his signature economic policy. The court due to rule on the legality of tariffs he imposed on an emergency basis. And there's the S&P. Not much of a reaction in the broad market. Bloomberg, though, saying that some companies that are seen as potential winners if the Supreme Court goes against the tariffs have now dropped. We saw Lululemon down about 2% apparently at one point. The broad market is down. Mattel and Hasbro also down briefly in trading today because those three companies would be big winners if the tariffs were knocked down because they're big importers. Let's get to hot picks. Small caps are the topic. Our guest says concentration in large cap areas of the market is setting up an opportunity for investors who go in for disciplined stock picking in small and mid cap companies. We're joined by Sajan Bedi, VP and Portfolio Manager at Canoe Financial. Sajan, thanks very much. That's great. We're going to focus on some Canadian small caps. I guess one of the problems with these small caps is lack of liquidity in some cases and just lack of institutional interest.
Yeah, we think so. That's obviously been part of the reason that you've seen this massive valuation disconnect between, the more liquid large cap segment of the market, whereas small caps have languished for the last decade or so. But we think we're getting to the point where the valuation gap is just so extreme between the large cap areas of the market and small cap, which we present as more of an opportunity from these levels. So we're excited about the opportunities that we're seeing in the portfolios today.
Let's start off with Richelieu Hardware, RCH. What attracts you here?
Yeah, so Richelieu, we would kind of think of as a very high quality cyclical business that's been in a cyclical downturn, but that we think has a long runway for compounding ahead. So just to level set, Richelieu Hardware, they're a leading distributor of specialty hardware products, both in Canada and the US. And what we really like about the business is that they've created this product suite that has the broadest products available in the market right now, have very high customer service. And what that does is create a really attractive one-stop shop experience for their customers and for distributors. And what that's allowed the company to do is be a consistent market share gainer over time. What we also like is the company has a very strong track record of capital allocation. They buy small mom and pop operators. They don't pay very much money, pay 4 or 5 times EBITDA, and then can add a lot of value to the businesses that they acquire by, having procurement synergies and cross-selling their broader product portfolio to the companies that they acquire. So, even though the housing market has been weak over the last couple of years, we think with interest rates coming down and housing fundamentals set to improve, we think this is a good time to be looking at the stock.
We're tight for time, and I'm sorry about that. But Descartes Systems, what attracts you there, Sajan?
Yeah, I would say that Descartes is this very high-quality compounding business that's out of favor at the moment. So it's one of the leading providers of software to the logistics industry. When we think about the business itself, we think it's one of the highest quality businesses that we own in the portfolios. Has 45% EBITDA margins, very high free cash flow conversion, mostly recurring revenue. But the stock has been under pressure because there's concerns around AI disruption in the broader software space. And we think given the company's very strong competitive positioning, given the company's network effect, that those concerns are unwarranted. And with the stock trading toward the low end of its historical valuation range, we think this is a business that can compound earnings very strongly and has multiple upside as well.
And then finally, Volution Group. It's a supplier of ventilation products. What's the attraction here?
Yeah, so a little bit of a different one. Obviously, this is more of a UK-based business that we introduced to the portfolios about a couple of years ago. And just to level set, because probably the viewers don't know this business as well, but they're a leading supplier of ventilation products across Europe and in Australia. And so you can think of their products as, fans or exhaust units that would go into a home or an apartment that make the home or apartment very energy efficient. So we think the company benefits from a secular theme of increasing energy efficiency standards within homes, and also has a consolidation runway that the company has executed very, very well on. So the stock has performed well over the last couple of years, but when we think of its valuation relative to other very high quality industrial businesses that we look at, we think the discount is unwarranted. So this is a name that we continue to like as well.
Sajan, thank you very much indeed for joining us.
Thank you so much.
Sajan Bedi, VP and Portfolio Manager at Canoe Financial.